Debt collections SaaS platform Credgenics recently raised $50 million in its Series B funding round, led by Westbridge Capital, Axel, Tanglin Ventures, Beams Fintech Fund, and other strategic investors. The company is now valued at $340 million and will use the fresh funds for product innovation, global expansion, as well as for capturing other BFSI industry segments. To elaborate on these plans, joining me now is Credgenics co-founder and CEO Rishabh Goel. Rishabh, welcome to Startup Street. Now, Credgenics is a SaaS-based debt collections and resolution technology platform. If you could first explain to us how you've reimagined debt recovery through digitization and analytics at Credgenics, and then take us through your suite of debt resolution solutions.
No, thanks a lot for the introduction. So I think in India, there's a huge problem of credit penetration, which almost all the lenders are trying to solve. And hence, there is a lot of disruption when it comes to the fintech lending space, right? All the companies, whether it's Paytm, BharatPe, anyone actually is trying to penetrate and deep root the credit to the last mile where actually it's required. So a lot of focus was there on penetration problem, but I think the major problem across the lending ecosystem was that the collections are not digitized, and hence it's a high manpower intensive job, which is not scalable at the same pace the lending is. Hence, it was very important that you can digitize the entire ecosystem, because if you're able to digitally source the loans, then there is no reason why you should not be able to collect them digitally and create a digital interface for the borrowers also to repay. Maybe I think what all manual interventions are required, to a larger extent, they can be automated or digitized. So we are working with 100 plus lenders, banks and BFCs in India, outside India, in Indonesia and Vietnam, to help them streamline this entire flow around collection, so that like it helps them lend faster and it just helps accelerate the growth of financial
speaking from what you just said, Rishabh, like you said, Credgenics works with over 100 leading private banks, NBFCs, fintechs, and asset reconstruction companies. You've touched an overall loan book worth $60 billion in FY23. What is the kind of efficiency or increase in resolution rates and improved collections have you brought for your clients? What would you say is your USP?
So we monitor multiple KPIs, we call it, right? Key performance indicators. So one major performance indicator is how we are able to overall reduce even the bounce rate, like as in that if you're able to reduce it even to go into the delinquency bucket, what is the delta improvement in that? So that's a major one where at an aggregate level, if I have to say, there has been some 7 to 8% improvement in terms of even bounce rate getting reduced at an overall level. So suppose there were 100 customers whose EMIs were due on a certain date. Earlier, there were 20 customers who used to, or maybe 25 customers who used to bounce. And now after the implementation, that number has gone down to 17 or 18. So there is an absolute 7-8% delta in terms of how my bounce rate has gone down, which essentially means that now collections is not that big of a problem statement in terms of the funnel. So that is one major area. Second is the cost of collection, how removing manpower in terms of call centers, field activities, you are able to move more towards the digital approach, because obviously the cost of sending an SMS, WhatsApp, or a voice pod call is much lesser than a human intervention, and it's also prone to escalations. There is a lot of RBI involvement which has now come into the play to ensure that the customers are treated fairly, and there should not be any major harassment while dealing with the customers, because there have been so many cases where fintech lenders are unduly exercising their collection activities to harass the borrowers. I think so. A lot of these parameters in terms of compliance breach, in terms of resolution rate, in terms of cost of collections are the KPIs which we track, and there have been significant improvement in terms of resolution rate. I think if we say depending upon the product, but at an overall level, there would be at least 15% improvement in terms of overall.
Rishabh, those are some good numbers. Let's talk about the $50 million funding that you've raised. You plan to innovate and expand globally. If you could elaborate on these plans, what are the new offerings in the pipeline, and what new geographies are you eyeing?
So we are eyeing, there are two major things from this fundraise which we are trying to solve for. One is global expansion, which is outside India. We are now in Southeast Asia markets, in Singapore, Indonesia, Vietnam. I think we'd like to expand the offerings and set up a full infrastructure and team there. Second would be to capture even other segments. Like, for example, we are entering even the premium collections use case for multiple of the insurance companies, because that's also a big area where collections happen, or maybe the renewals happens manually through call centers, etc. So that is another segment which we're opening. Third, obviously, we are looking out for some strategic M&As if available in the near adjacent, I would say, product avenues. which are selling into the BFSI ecosystem. So I think we're in discussions with a couple of companies from
Okay.
a acquisition standpoint, if we can help fast track that journey. So I think these are 2 or 3 major areas where we are trying to focus upon.
Okay. Credgenics valuation has increased over 3x to $340 million, like I mentioned earlier. From your last fundraise in 2021, you've achieved 7x growth in revenue. You've turned operationally profitable with 100 crores in revenue in FY 2022 to 2023. What has led to this bullish growth, Rishabh, and what are the revenue targets going forward?
So one, obviously, the major factor which essentially helped us was in the COVID phase, where a lot of focus was on digitizing the entire processes internally across the sectors. I think so. One was big push, which actually enabled or accelerated the adoption of digitization across the banking and NBFC segment. Second, in terms of what exactly we see as our milestones in terms of revenue, I think so. We have posted close to 100 crores last year, and I think this year at least the target is to grow 2x from this number
Okay.
and achieve 100% growth. So I
All,
think that is the target, remaining operationally profitable. So we are this year, at least at a monthly level, we broke even. So I think the target is to at least not lose that. Uh, 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 I would say
sure.
that lose that gist of running things profitably and in a very unit
Okay.
economics, like
All right.
keeping unit
One
economics
one
in check.
final question: is inorganic growth the way forward for you? And if you could also talk to us about your global expansion plans.
So on the inorganic side, I think we are looking out for companies whose offering is adjacent to ours, maybe in the risk segmentation side, like who is selling to the basically the banking ecosystem itself, but maybe not on collections, but on other areas of the lending ecosystem or lending value chain. So those are some of the companies which we are having discussions with in terms
Okay.
of if we can acquire. Second, in terms of global expansion, I think a lot of markets like Indonesia and Vietnam and other Southeast Asian countries have exactly the same problem statement as India, where the numbers in terms of GDP per capita or maybe the collection rates or the lending
Okay.
credit penetration exactly mimics the Indian ecosystem. And they're 5 years behind India in terms of financial services play.
Okay.
So those are become an ideal market for us, where
Sure.
the population is also high, and also these are the real problems which we are
All
solving in
right,
India
Rishabh.
to be solved there.
We've run out of time, but wish you the very best in all your growth plans, and many thanks for joining us on Startup Street today.
Thanks a lot. Thanks a lot.
One
Thank